Last month's non-farm payrolls were stronger than expected, while inflation is nearing the Federal Reserve's target. So, does the Fed really need to cut interest rates again this month? The upcoming NFP might give us the answer. Let's break it down in this video and dive into what this could mean for currency pairs, commodities, and stock markets. The October non-farm payroll numbers will be released on November 1st at 3:30 p.m. GMT3. Watch until the end so you don't miss out on the potential trading opportunities in the market. Before we dive in, don't forget to hit the subscribe and notification buttons to stay updated with the latest trading insights. The September NFP surprised the market with 254,000 new jobs, which has far surpassed the estimate of 144,000. The unemployment rate also dropped to 4.1%, which is lower than expected. Additionally, wage growth exceeded forecasts, with hourly earnings up by 0.4% month-over-month and 4% year-over-year. The stronger-than-expected NFP report indicated a robust economy, reducing the likelihood of another consecutive 50 basis point rate cut. Immediately after the release, the US dollar index regained upward momentum. On the flip side, gold prices initially slumped but later rebounded due to geopolitical risks and uncertainties surrounding the US election. Conversely, oil was bullish in response to the strong jobs data, though geopolitical tensions and weakened demand from China later have since put oil prices under pressure. Meanwhile, the three major US stock indexes rallied on the positive job report. In the upcoming October non-farm payrolls report, job growth is projected at 140,000 new positions, with the unemployment rate expected to hold steady at 4.1%. Meanwhile, average hourly earnings are set to rise by 0.3% month-over-month, marking a steady 4% increase year-over-year. The market currently sees a 97% chance that the Federal Reserve might cut interest rates in November. A disappointing NFP report this month could solidify this expectation and lead to an aggressive 50 basis point rate cut. This outcome would likely boost the US stock market, gold prices, and non-major non-US currencies. The following is the technical analysis of 4 assets that could be highly volatile around the NFP data release. Stay until the end for some amazing trading opportunities. With the US elections around the corner, we might see the dollar slowly trending up. If the NFP report is strong, it could push the dollar index higher to test 104.85 or even 105.02. However, if the job growth is weaker than expected, the market may expect a rate cut from the Fed, which would likely push the dollar lower. In that case, the dollar index will likely be below 104 and possibly break its recent support. On to the GBPUSD. If the NFP report shows strong job growth, we'll likely see the dollar strengthen and push the British pound down to levels like 1.2904 or 1.2881. However, if the jobs data fails to meet the expectations, the dollar could lose momentum, and we might see the pound push up to test resistance at 1.3027 or 1.3051. Moving on to gold, which has been trading around the moving averages lately. A weak job report could increase the chance of a Fed rate cut, which is usually great for gold. If that happens, gold might climb to $2,773 or even higher. But if the report beats expectations, gold might struggle and drop to its support level around $2,685. Now, let's talk about US stocks. The Dow Jones Index has been under pressure lately in trading below its moving averages. If the NFP data is weaker than expected, we could see a rebound to 42,574 and 42,751 as traders will bet on a Fed rate cut. But if the job numbers are strong, the Dow might keep dropping and test levels below 41,800. The above recommendations are only for your reference and should not be considered trading advice. If you find this video helpful, let us know below and remember to like and share. Don't forget to click the subscribe and notification buttons to keep up with the market updates. See you next month.